Hello and welcome to the fifth episode of the True Dollar web series. As you all may know by now, Texas Trust is presenting a monthly webinar on Facebook Live every second Tuesday of the month to help our community and members manage their finances better during the tough times we're living in. Like always, you're welcome to leave comments or questions during the live session. We'll be sure to answer as many questions as we can in the allotted time. And my name is Washima Huck. I'm a business and community engagement partner for Texas Trust Credit Union, and I will be your moderator today. Credit is oftentimes the most hard to understand concept for some consumers. From understanding what your credit score means to what goes on your credit report, why credit matters, and how you can improve your credit situation are questions we oftentimes get in the industry. In this hour, we hope to define some of these concepts and highlight a few best practices. But first, we at Texas Trust would like to highlight some resources accessible to our members and in our community. So every month, we will be highlighting a nonprofit organization located in one of our Texas Trust towns. May's nonprofit organization is CCA. I would like to invite Sandra Sims to share how they are a great resource for our community. Sandra will stay on until the end to take any questions our viewers may have for her. Sandra, over to you.
All right. Well, good morning or good afternoon, everyone. My name is Sandra Sims. I am the Corporate Relation Manager for Christian Community Action, AKA CCA. CCA been around since 1973. We are the largest nonprofit, private-owned nonprofit in North Texas. CCA is headquartered here in Louisville. We serve Collin County, Denton County, Dallas, Tarrant. We service 8 different school districts. So we have Argyle, Carrollton Farmers Branch, Capel, Frisco, Lake Dallas, Louisville, Little Elm, and Northwest ISD. About 94% of individuals and families we serve are at or below the poverty level. And so we are that step between them going all the way homeless to making sure that we get them back up on their feet. CCA is broken down by 3 different levels on how we do things. One is that we do rescue service. Rescue services, they need it immediately. They need their rent paid. They need their utility pay. They need food. That is our rescue. Relief is our summer program. We have a summer feeding program where we feed the kids once school is out. We give them a meal, and then we give them food on the weekend. They do not have to be part of our service in order for us to service kids. In fact, this year we will give out about 50,000 meals just to kids, to our Kids Eat Free program. And then we have a back to school program. And the back to school program is that we fill their backpack with all the supplies. We also give them, in the past we had partnered with Old Neighbor, but because of COVID, we had to rethink things. And so we give them gift cards so that they can actually go out and go school shopping. And we would service probably about 1,500 kids with back to school. Christmas, we have a Christmas program where the parents come and they give us the kids' Christmas list. We have little elves that go through here and we try to make sure that everything that the kid asks for is in there. And then the parents come and pick up the toys and the wrapping paper and the stocking. And then the parents take it home and they wrap it. We have a senior citizen program where we feed our senior citizen. Right now, because of COVID, we're delivering meals. But before COVID, our senior citizen will come here on Monday and they will fellowship and they will have a hot meal. And then they will be the only people that shopped in our food pantry. Our food pantry is set up like a grocery store. Our food pantry is client choice. So they can go in there and they can choose whatever they want to get. And we don't give them their item, but because of COVID, we're packing it. But in July, we will be opening back up. And with that, Since COVID started, we have paid over $2 million just in rent and utility, trying to prevent homelessness. We've also went from serving 60 families per week to 280 families, which is 367% increase. Since COVID, we have provided over $2 million in rent and utility to prevent homelessness. Our food pantry has serviced over 3 million healthy meals out, which include over 1 million pounds of fresh fruit. These are just some of the things that CCA does. And then I said that there was 3 services. So I said there was a rescue, there was a relief, and there is a restoration. And the restoration is all about getting them back, and so that they don't, we're not just giving a handout. So our ESL classes, our computer classes, our finance classes, we do job hiring fairs. We have those twice a year. Job readiness, where we teach them how to write their resume, how to do interviewing skills. And then we have spiritual care. We have counseling. And so these are just some of the things that CCA does to get our angels back on the bed. We believe in giving a hand up, not just a handout. So we can teach them those things and help them be successful, then hopefully that somewhere along the line they pass on. And we're always, and our volunteers is the one thing that have saved CCA. We have over 2,000 volunteers that has kept us afloat, because we only have 24 staff members, and serving that many people, you can't do it alone. You need the help of the community.
Wow, that is incredible. Thank you so much. Really, you guys are a blessing for our community, and you've done so much, especially during the pandemic. I can't thank you enough. And thank you for being here today. We do have your contact information posted in the comments. So if any of our viewers are interested in reaching out, they have a way to do that.
Okay, thank you.
Absolutely. So just a little bit about Texas Trust. Again, our mission is to build brighter financial futures, and we've been helping people live brighter since 1936. We are a not-for-profit company. That means we invest profit back into the credit union to help our members and our communities by offering higher savings rates, lower loan rates, and through community engagement. We are a full-service financial institution with 20 locations in Texas. So for more information, please visit texastrustcu.org. And now I would like to introduce our presenter today, Mr. Alex Godina. Alex Godina is currently the Assistant Vice President of Direct Lending here at Texas Trust Credit Union. Alex has been a part of Texas Trust Credit Union since 2011 and has over 18 years of experience within the financial industry. He is truly passionate about helping others, which fits the credit union motto of people helping people. Through his role at Texas Trust, he has facilitated financial workshops throughout our community, educating students, parents, and community residents on several topics regarding finances. Alex is active within our communities and currently serves as the Vice Chairman for the Greater Arlington Chamber of Commerce Latino Business Group. He is also a board member for the Grand Prairie Chamber of Commerce, where in 2019, he was presented a proclamation recognizing Alex as being the first Hispanic to serve as the Chamber of Commerce's chairman, marking September 17th, 2019, as being Alex Godina Day in Grand Prairie. When Alex is not volunteering in our community, he loves spending time with his family, exploring new restaurants, and enjoys cheering on the Dallas Mavericks. Alex, we are so thrilled to have you present our webinar today. I'm going to turn it over to you now.
Thank you, Oshima, for that great introduction. I couldn't write it better myself if I tried. Thank goodness for Photoshop too. My goodness, I look great in that photo. Sandra, what an awesome opportunity to be able to share this with you today on this platform. And thank you for having that servant's heart and reaching out to our communities. We need more organizations like you, like your organization, that helps strengthen our community. So thank you. Good afternoon. My name is Alex Godina, as Washima had mentioned. It's definitely a pleasure to be able to share with you today my experience and a bit of my knowledge when it comes to that I've been able to obtain when it comes to dealing with credit. There's no doubt at all that credit plays a important role in our lives. I mean, credit plays a major factor when we're talking about buying houses or getting that dream car, that Corvette, or even in education. Credit plays a major factor and major role in those. The goal of this seminar this morning or this afternoon is to give you a basic understanding of what credit is. And during this presentation, we will talk about a few things. The objective of it is, apologize, a little bit delay here. What we'll be talking about during this presentation will be credit cards. We'll take a look at some credit cards. And believe me, I am experienced when it comes to using credit cards, unfortunately. But we'll talk about some best practices on credit cards and what that looks like. We'll also take a look at what lenders look for when approving credit. We'll take a glimpse in of factors, the different factors that impact your ability to qualify for credit. And we'll also look at the different elements that are and that may not be on your credit report, and what that looks like. We'll talk about how credit is scored, and then we'll discuss the impact money management has on your future credit standing and ability to achieve your financial goals. So basically, how you're managing your money. It's definitely an exciting topic for sure. When we start off talking about credit cards, I mentioned how experienced I am in using credit cards, and a lot of us have that experience. For example, I recall going to a well-known superstore here and being excited to make a large purchase. And when we went up there, I was excited until I saw the price of that purchase. And when I saw the price, I turned to my wife and I said, babe, I don't think we can afford this right now. All of a sudden, one of my kids behind me had said, no, Dad, we can afford it. Just use your credit card. That mentality of just using your credit card, don't worry about it. That's funny. And if we didn't have to pay that back or be responsible for that, that would be pretty awesome. But unfortunately, that's not that's not the case. That's not how it works. Now, credit cards are not a problem, or having a credit card is not a problem. It's how we use them that is the thing that we can either benefit us or put us more in a financial crisis. So when we're looking at credit cards, it's a great tool to use. I mean, you can use credit cards for emergencies. That's a great use for them. Now, I mean real emergencies. I'm not talking about the latest purse or the latest, gaming system, but honestly, true emergencies. It's a great tool to use for that. Also a great tool to use for building credit. Good way to start and build your credit is to utilize that credit card, making sure that you're able to charge back the full amount that you end up using on it. And then also utilizing it for payment history, making sure that you pay on time and that you meet the minimum payment helps you also to establish credit. So credit cards are a great tool to have. I mean, they're a better resort than some of the most expensive credits that we've heard or that we see commercials on, such as payday loans, rent to own, pawn shops, title loans. Those types of credit can be a little bit more expensive, and they often offer a higher APR or percentage rate. So just be cautious when using that. Just know that credit cards are used as a tool for sure. Now, having good credit does definitely matter. You will have good credit. If you have good credit, then lenders are more likely to approve your credit applications with lower interest rates. Now, lower interest rates, what that's going to do is overall, over time, that's going to help you save money. So you always want to make sure that you educate yourself on your interest rates and know what that looks like. on your different loans that you have. Now, your credit score not only affects your rates, but it also affects your eligibility for things like car loans, mortgages, credit cards, of course, any personal loans, and even business ownership as well. It also affects items such as insurance costs, employment opportunities. A lot of employers now are running your credit and trying to see that snapshot of what it looks like, of what your financial history looks like as well. So just keep in mind that it affects a larger amount of other things other than interest rate. Also affects housing options, knowing how much of a house you can afford, how that looks like. Few webinars back, we had Scott Meggs, who spoke on mortgage and talked about mortgage and went through different options within mortgage. So I tell you, go back and click on our video section and look at the other seminars that we're having here just to help educate yourself. Another thing that credit is kind of takes hold of also is a telephone. Not too long ago, I had to get a new cell phone because I accidentally dropped my cell phone. And did you know they run your credit to make sure that you qualify for certain cell phones? So definitely want to keep that in mind, your cell phone. And it's hard to go without your cell phone. Who would have thought here now that I would say, where's my cell phone? But it's definitely something that we tend to attach ourselves to. Also, good credit helps with utilities. And then also when we're looking at, again, our interest rates, it allows us to get a better interest rates, lower interest rates. Again, lower interest rates going to help you with lower payments and help you over the life of a loan. So just keep in mind that good credit, it definitely does matter. Now, I will talk throughout this presentation and I'll use some examples that are more personable to me. And I like to use examples that I've been through. So, along with credit, there's having that good credit. There has been times where I've needed opportunities to improve my credit. And there's been times where I've been at the counter and they said, do you want to save 10% on your purchase today? 10%? Yeah, that's $30. Oh my gosh, I could get a pizza or something, a couple of pizzas for that. So I said, yeah, let's do it. And then I would get that decline. And it felt so bad at the time. And I'm sure there's few people who actually have experienced that being denied for credit. And it's not the best feeling in the world at all. Just know that it doesn't mean that you're a bad person. It didn't mean that I was a bad person. It just meant that there were some opportunities available that I needed to do or I needed to take to help build my credit. There's several different reasons why credit can be denied or a person could be denied for credit, such as lack of credit history, whether your accounts are in collection status, voluntary or involuntary repossessions, history of slow payments. So if you're not paying on time, having that history could catch up on you. Bankruptcy or foreclosures, accounts that are charged off due to non-payment, or even short employment or overextended your current credit obligations. Maybe I've taken out so many things that it's better that I don't qualify them because I wouldn't be able to pay those back. So think of it also as a safety net. But all these factors are ways that you can get denied, and factors that have at one time I was a part of. And just know that the best way to know where your credit stands, and we'll talk about this throughout our presentation, is to educate yourself on what is on your credit report. If you have a lack of credit history, then what things or what steps you need to do to build that history, or maybe, like I said, your employment as you just started a job, maybe give it a few months and revisit that opportunity. But just because it's denied doesn't mean you're a bad person and everyone's pointing at you. No, it means there's opportunities available for you to do some things, move some things, to rearrange your finances so that way you can get on the right track. So keep that in mind for sure. Now, a credit report, we hear this all the time, credit reports, credit report. Credit report is basically a summary of how you handled your credit accounts. Okay, it includes the different types of accounts, also includes your payment history, as well as other information that is reported to lenders and creditors. Okay, I've also heard it, and I love this saying or this description of it. I heard it being referred to as a snapshot of the borrower's financial history. So today, our cities and our businesses are creating walls that are called, and Washima might be able to help me out with this, but are Instagram walls, or where you can go and take an Instagram picture and post that you're here. And yes, I do that. I'm guilty. I do that. So I like this analogy or this description. It's definitely a snapshot of a borrower's financial history. Just keep that in mind as a credit report. A lot of times, I think some of us think of a credit report and we're like, oh gosh, no, I don't. Just think of it as a snapshot. Great thing about that is that you are in control of that snapshot, of what happens to that snapshot. So there's ways to go back and make it better and kind of Photoshop, I guess, if you will, or whatnot. But some different actions that you can take to make that better. Now, there are three major credit bureaus that use or create these credit reports. You have Equifax, Experian, and TransUnion. All three of these companies, they gather information about you, your financial history, and about your accounts. And they take all that information and they use it to help create your credit report or display your credit scores. Although these bureaus will have different layouts of the credit reports and they have different models of how your credit is scored, just know that these reports help assess a lot of different things. They help assess different insurance risk. They'll help determine a response rate to a pre-approval, or if you get a pre-approval letter, then they've utilized those credit reports or that information that's been reported to those credit bureaus. They utilize that information to develop a pre-approval loan. They help identify revenue potential. They also highlight collectability. And then they help identify bankruptcy or even fraud potential. So a credit report definitely could be on our side whenever we're trying to identify fraud. And we'll look at a tool that would help out with that further down in the presentation. So when we're talking about credit report, what are some things that are not listed on your credit report? There's several different elements that aren't listed, which includes your race, your nationality or national origin, your gender, criminal record, medical history and records, your bank information, any interest that is being charged on a credit card or other account, and any rental agreements. So just know that there's some information that is not listed on there. But the information that is taken, that the credit bureaus use, that is used to help create your credit score and to tell the story. Remember, it's a snapshot of your financial history. So when we're viewing our credit report, we again go back to being anxious and even being a little concerned sometimes. I can recall several times when we first started, my wife and myself, and it's almost treated as a chance, a will of chance of whether or not it's going to get approved or not. And if it's approved, we go, yay, it's been approved. and it's not, we go, oh, I didn't get approved again. So it's definitely one of those times that as you continue through your path of building your credit, of understanding your credit, of reviewing your credit report, knowing what's on your credit report, and making a plan. You have to make a plan of things that will help you get into wherever you want to go, your financial goal there. A good way to start off is to definitely see what's on your credit report, know what's on your credit report. I want to know what the lender is looking at when they're pulling my credit report. I want to know why they determined that I have a certain, I fall in a certain interest rate category, or I want to know how my history is doing, and are my payments being paid on time? Is that reporting correctly as well? So some different tools to do that are utilizing what our internet and the access that we have there. This past year has definitely, and we were talking about this a little bit before the seminars, this year has been a really, really exciting year. And I say exciting with a smile. It's been an interesting year because there's been so many different things that we didn't know what's going to happen or what's going to occur. There's been, opportunities that we were counting on that have kind of gone away. There's been changes in financial history and in our lives as well. And the best thing to get back on board, or even as you're continuing on your journey during this time of uncertainty, and as we start to open up and get back to some sort of normalcy, is reviewing your credit score. Now, we have those 3 reporting credit agencies, and during COVID, they opened it up and they had gave people weekly access to monitor their credit report for free. It was free. They opened it up and they said, during this time, we know there's changes, we know there's things happening. It's important to you, so it's important to us. We're letting you access and monitor your credit report for free. The great news is that we've heard that they are going to be extending that benefit up until April 20th, 2022. So take advantage of that, okay? Everyone is eligible for getting that free weekly credit report, again, up until April 20th, 2022 from the 3 credit reporting agencies. What a perfect way to start off to say, okay, I'm gonna pull that credit and we're gonna look and we're gonna talk about it. If you have a spouse or a family and you guys want to get together and discuss that, do that. Educate your children as well. I've had the opportunity to sit down with my kids, the ones who said, you have a credit card, just charge it, Dad. Don't worry about it. We've had times where we've sat down as a family and we've discussed credit, and we've discussed checking accounts, and we've discussed the savings accounts, the importance of it. We discuss budgeting and how that looks like. As a parent, it makes me feel 100 times better as my kids go off into college to know that that's one less thing they have to worry about, right? So definitely educate each other, educate your children, even your neighbors or groups. And Sandra with CCA, I know they do some things there as well, focusing on that. So look for an organization that might highlight that opportunity to be able to talk about that and listen to that and to learn about it, okay? Another great site to pull your credit on, and you get a free credit report once a year from each credit bureau, is annualcreditreport.com. Okay? You want to be sure to be able to pull your credit, and that is one website that you can. Another benefit to pulling your credit is, and we kind of talked a little bit about it, is identity theft. Even more so now, technology and the access that is out there for people to take your identity. The best way to help prevent that, one of the best ways, is to yourself monitor your credit, monitor your accounts. So that way you can catch it once it comes up, and you can go in and dispute some of those charges, can dispute some of that information on there. But definitely any inaccuracies that are on your credit report, you want to be able to utilize annualcreditreport.com is a great website where you can dispute those any of those discrepancies that you find on your credit report. An ID theft monitoring tool, again, is focusing on uncovering identity theft. I use one here at the credit union as well, that where anytime there's activity on my credit, it sends me an alert and it lets me know that, hey, Alex, there's an alert that your credit was pulled for this at this date, yada, yada. And if it's not, then it gives me the ability to go and talk to somebody about that. So definitely utilize an ID theft monitoring tool, because if you've ever been a part of any identity theft, I know you'll agree with me that it costs money and time. And sometimes that just is not something we have a lot of, but a good way to prevent that or to catch that at the beginning is utilizing an identity theft monitoring tool. Consumers can get a copy of their FICO score on myfico.com as well from, again, the 3 national credit reporting companies. So those are 3 or 4 really good tools or websites to utilize when viewing your credit. So once you view your credit and you're looking at the time, and this is a question that we get several throughout the several conversations that we have. I love this layout because it tells you exactly kind of what remains on your credit and for how long. For example, negative credit information remain on your credit files for 7 years for the date that the debt first became delinquent. Positive credit can remain indefinitely, as you see on there. Open positive accounts can remain indefinitely. Closed accounts are in good standing and are usually removed from the credit report after 10 years. But you want to make sure, again, that you know these, and as you're going through the motions or as you're building your credit, that you understand the time frame that it has in it. So it all has a benefit definitely to it. Positive history associated with any accounts, they'll remain on your credit history, and just know that once an account is removed from the credit history or from your credit, all that history goes along with that account. So definitely we have time that is listed there for you. Now, when we're looking at the credit score in itself, this pie chart highlights the percentage that is made up of the credit score. And what is the main one you see on here? That's payment history, 35%. Payment history is something you can control. And I love seeing that it's a larger section of it, because if I'm in control of it, then it's going to impact my credit even more so. Now, FICO scores, credit scores range from 300 up until 850. It's funny because when I talk to school age kids and we talk about credit scores or even high school kids into college, we talk about credit scores, and I ask them the question, what are the range of the credit scores? And even adults, you get all these different ranges. Just know 300 to 850 is usually the range when it comes to it. But when we look at the payment history again, 35% is a large portion. When you look at amount owed, 30%, length of credit history, 15%. Now that's the age of the credit that is on your account. That is very important as well, because if someone's looking at your snapshot, they want to know that you're going to be paying as a lender. You're going to be paying, or you have a pattern of paying on time. Okay, I kind of tell people, basically think of a line and think of a good pattern and a bad pattern. Above that line is a good pattern. Below that line is a bad pattern. Every time you make a payment, you're building good, good, good. Or if you're late, you're building bad, bad, bad. So definitely having that length of history, credit history, definitely helps you out throughout the term or throughout your credit report when they're looking at the age of accounts, okay? And then any new credit as well, new credit and types of credit, 10%. When we're talking about new credit, your credit report will also displays what we call inquiries, which means anytime your credit is pulled, those inquiries are tacked on to your credit report. And those could be beneficial, but if you have too many, those could also hurt your credit score, or your availability, or your ability to get credit as well. So you have to be careful on how many times it pulls. And then it's also a great way to identify any, again, fraud or any identity theft if you see that your credit's being pulled, but it wasn't you. So again, that's why it's important, and that's why I will push constantly on educating yourself and knowing what's on your credit score, or your credit report rather. So the different actions that impact our credit score, and this chart outlines how the different actions that impact that altogether. Now you'll notice the green ones, like paying your bills on time, having a diverse range of loan products. Usually those have a lower impact. As you scroll down, you'll notice the inquiry about new loans or obtaining a new loan or account has moderate impact, right? And then maxing out your cards, your credit card, or late payments, charge-offs, foreclosure, and bankruptcy, those have a higher impact on your credit score. So as you go through and you're looking at your credit score, just know that there's different risks that play out within that credit score. So keep this table and refer to it as you go through and you talk about your credit with your family, or with someone who wants to know more about credit. The recovery time for credit, from this graph, definitely you will notice at the top, obtaining new credit, which is in blue. New credit is something your credit score can definitely recover from quickly. Closing the account is not too far from it, okay? How your credit recovers from that. And then you'll notice the missed payment. You'll notice that percentage of the impact of the credit score is higher. And then also the recover time is higher. Now, if you are a person who loves to work out, you know it's about the recovery after your workout. That makes a difference in there. So, or an athlete. So definitely the recovery time is extended when we're talking about missed payments or default. And if you look at bankruptcy, it's even a higher impact and a longer recovery time on your credit score. So how can you improve your credit score? You know, Alex, what are some best practices that I can do to improve my credit score? And I was just asked this the other day, and I loved it because I was like, that's so perfect with the presentation that we're going to do. Is how can I make my credit score look better or put myself in a better position to get that approval or to get those low rates? Well, you can start off definitely by paying off old delinquencies. Okay? Any old delinquencies that are showing up on your credit, you want to pay those off. You can contact and find the contact information through the credit bureaus as well on how you can pay those old delinquencies off. And again, a easiest way or to start to build credit is pay consistently on time. Remember your history, remember that pie chart? That pie chart showed 35%, okay? So we want to make sure that we pay consistently on time. Also want to keep your balances significantly lower than the limit. A good scale of practice is 30% or less, okay? You want to keep that. You don't want a high balance. You don't want to carry over a high balance. You want that balance to be lower. 30% or less is a good rule of thumb when we're talking about that. You also want to make sure that you maximize average account age. You know, newer accounts, just know that they lower your credit history because they reduce the average account age. Older accounts help your credit history because so keeping your older accounts actually helps out. So you get a longer history with your older accounts. And then also limit the number of overall open accounts and limit the number of credit applications made. Remember, we talked about the inquiries and how it shows up every time you pull your credit is ran or you fill out an application for your credit to be run through the system. Just be sure to limit those credit applications. So what if I'm new to credit and I'm looking at establishing credit? I'm just a beginner, or maybe I'm a college student getting out, about to go on my own, or I'm a high school student about to, or I just need to establish credit. Alex, what are some things I can do? Well, number one is going to be the gimme, right? It's to pay your bills on time. That's number one. If you have your bills, be sure to pay them on time. I'm telling you, that is the easiest thing you can do to help with your credit report or help with your credit score. Also, build credit with a secured credit card. My daughter, when she first started getting into credit, we were looking. I joined the credit union. I was understanding what a secure credit card was and the benefits of it. And she didn't have a credit score. She didn't have an established credit. Her credit wasn't built. We got a secured credit card, and through that, she was able to build her credit by what? Number one, paying it back on time, paying that balance or paying that payment, making that payment, making sure it's on time. She started building her credit, and over a while that she was doing that, she was able to establish herself and build credit and have a credit score that was a good credit score. And then as a parent too, like I said this before, it helped also her train herself, I guess, or it helped us as parents, again, get her the real life experience of credit cards and what it means to credit. So no longer that motto of just use your credit card and swipe it. We'll worry about it later. No, the understanding was when I swipe this card, I'm responsible for that payment and I have to pay that back. It also helps with late fees. You don't want any late fees if you don't pay your payment on time. So definitely pay your bills on time, help utilize the secured credit card. We have them here at the credit union. When my wife and myself first bought our house, that was one thing that they told us to do is to get a secured credit card. So it's a great way to establish any credit is to utilize your secured credit card. So we have them here at your credit union. Feel free to reach out to us and we'll see we'll have someone reach out to you rather and talk to you more about that. Again, establishing credit, keep your balances below 30% of your credit limit. Keeping those balances low will help out with that. Apply for new accounts only as needed, okay? Just because you want a free backpack for signing an application doesn't really mean you need to have that credit card. If there's a need there, and I believe we had Whitney, one of our leaders here at the credit union, talk about wants and needs in one of the seminars that she gave as well. So again, going back and reviewing that and just educate yourself and knowing what that wants and needs is. You'll be, I'll tell you, you will be shocked on some of it. I ask that question all the time, but be sure to apply for new accounts only as needed, not that emergency of that new purse or that gaming system. Also, again, review your credit report for errors. That's a great way to do it. And I've done it for my finances and my accounts, and I do it for my credit report, making sure that you review them for any errors. And then monitor cosign and joins accounts, okay? If you sign it, you're also responsible for it. So being a cosigner or joining an account, just know what those terms are that you agree to and understand that you are liable for that. And that can affect your credit as well, and it will affect your credit. So just be sure that you're cautious about some of that. So a good way to keep your credit in check or in a good shape, again, I will tell you time and time again, is make timely payments. If you have cash that you can use for settlement. Pay off those collections with that. Take care of those collection accounts. Use your savings for any emergencies instead of to turning into credit. Reduce your loan interest by refinancing. Now, this is huge because right now there's some great rates that are out there. If you're able to refinance. If you don't know what your term is and what's your interest rate that you're paying on a loan, go back and review that contract or review those documents and educate yourself on that, because most likely you probably could refinance that loan and help you save money over the term of the loan or the life of the loan. So definitely look for opportunities to refinance any rate that you have. Increase your monthly payments to pay off your card or loan faster and reduce the money paid on interest. So my wife and myself, we've purchased 4 vehicles. And through these vehicles, we said, you know what, our goal is within the next few years to have all 4 vehicles paid for. Okay, our vehicles, our kids' vehicles, let's pay them all off. So we started making a plan and saying we're going to put X amount of dollars extra into one of the payments. And we started doing that. And over time, we started seeing that the amount was going lower and lower and lower, getting closer to that goal. We paid off that one vehicle. We wouldn't have that extra $300 in our pocket and say, all right, let's go shopping. Now we can go shopping. We can buy this, that. And we said, no, we got to be determined. We have a plan. We got to stick to the action plan. And so we took that 300 and applied it to the next vehicle. And so forth, so forth. So just increasing those monthly payments, that helps with your credit and helps with that. So if you're able to do that, I would suggest you doing that. Consider a debt consolidation loan. Again, when you're looking at having several different interest rates for, let's say you have 4 different types of loans and they each have their own interest rate. If you're able to refinance those or to consolidate those into one interest rate, that takes you down from paying 4 different interest rates to 1 interest rate. So explore the opportunity to consider a debt consolidation. And then keep in mind, any credit repair agencies, there's some things that they can't do, or there's things that they can do that you also can do, but you can do it for free. So there's different ways of disputing incorrect information or disputing outdated information that's on your credit that you can do for free, that you don't have to worry about paying somebody large amounts of money to do. So just be sure to utilize that and take that step into building your credit and putting your credit in check. I hope that kind of gives you some kind of insight and some kind of understanding when we're talking about credit. There's so much more we could go into, but for the sake of time, and believe me, you don't want to listen to me talk all day. We'll keep it short. But I hope that was some information that maybe either reignited a fire in you to help build your credit, or maybe it's first time you heard the advice, and I hope you run with it. We're here for you, definitely. But I thank you for taking this time to listen to me, and I'll turn it back over to Washima.
Thank you so much, Alex. You provided us with a lot of great information. We have some incredible comments, and they love the information that you had to share. I just want to remind everyone that this video is going to stay on Facebook. So if you missed part in the beginning or you want to rewatch it or share it, you are welcome to do that. Alex, also thank you for tying some of our older webinars into your presentation. This is our 5th one. We did cover managing your finances during COVID, financing college, mortgage, understanding checking accounts and savings earlier in the year. Those videos are still on Facebook, so you're welcome to watch them or share them. So now I would like to encourage anyone watching this live to ask us or CCA any questions they may have. We will try to answer as many questions as we can in the allotted time, or we'll get back to you individually after the webinar is over. If you have any questions that are best answered offline, we'll message you directly. So I do see 2 questions at the moment. The first one is, what is considered an old delinquency?
Can you repeat that? I'm sorry.
What is considered an old delinquency?
Oh, delinquency. So they will stay on your credit. We saw that that file of how long they will stay on your credit there. Um, to me, any kind of delinquency that you have, you definitely want to take care of that to clear it off your credit score, because that's going to hurt no matter how long it's on there, for sure. So the best part is to see what pulls up as a delinquency on your credit score in itself. And then to kind of just to go back again to pay that off, or work on a plan of paying that off.
Thank you. And my next question is, does Texas Trust offer a secure card?
I am so glad you asked that. Yes, that is definitely through my example. Great question. Both of them are. Through my example, my daughter started her secured credit card here at Texas Trust, so it's definitely something that we have. Our motto here at the credit union definitely is to help build a brighter financial future. So we take that to heart and we run with it. And having that secured credit card, we do offer it to our members here. So if it's something that you're looking at doing, I will back you up on that. And I say, go for it. Visit one of our branches as well, and we'll get you started on that.
Perfect. And we did post a link for if you would like to get an appointment or have somebody from our team contact you about the secure card. Please click on the link and fill out the form and we'll be in touch with you. So our next question is, for keeping credit limit below 30%, does that mean across all accounts or each individual credit limit?
Very good question. That is each individual credit limit. You want to have that below 30%. It's what's called a utilization ratio on it. So percentage-wise, yes, it's a good practice to keep them all individually under 30. You don't want to overextend your credit and carry high balances over. That affects your credit score. But also keeping it below 30, it allows the lenders and creditors to kind of look, or lenders and financial institutions to look at that and say, okay, it talks about a little bit about your financial health and how you keep those at a certain point. So, and it helps your credit score increase as well. So good questions.
Next question is there a best practice to use when making payments? Like, should payments be made before or after the statement date?
Yeah, so you definitely want to make sure that they're done before the day that they're due, because anything that is done after, there could possibly be late fees tacked on to that. So in determining whether or not how early you want to make that, I have to let you make that choice on it. But you definitely want to look at that. Just know, and that's when you educate yourself on what your loan is and what the interest rate is and how that interest rate accrues. Because throughout time of making a payment, your accrual for your interest could be on a daily basis. So every day there's interest that is accrued on it. But definitely that's where the education piece of knowing what you signed for kind of comes into play. So yeah, as long as you're making it before that payoff or before that payment date, I would be happy for you on that, and make it consistently.
So our next question is about building business credit. Now, Alex, I know that's not necessarily your area of expertise. We can defer that to business services and answer it offline, but would you have any best practices for building business credit?
Yeah, I think you're 100% right on that, Washima. Is I'm not exposed to that area as much as I can be or want to be, but it is a different aspect on that. So I'll leave that up to the professionals in that field to get a hold of the member and talk to them.
Absolutely. So to the individual who asked that question, we will get you an answer offline after consulting with our business specialist. We have a question about mortgage, and again, same situation. You're not the mortgage specialist, but I mean, if you do have any advice, what is the
Yeah.
approved debt to income ratio for buying a house?
Yeah, the thing I know most about mortgage is paying the mortgage each month as well.
Same here.
So yeah, and you know what? I on Scott's on the previous webinar, I highly recommend you going and watching that because there is some great information on there that he shared when we're talking about mortgage and what that looks like. So that right after this, if you have time or later on tonight, click on the link and watch that video on mortgage as well. And I'm sure there's some information that'll help you out in that aspect.
Absolutely. And yes, absolutely. So that video is on our Facebook page. It's also on our YouTube page, and you're welcome to watch that. He does cover that information. But again, we'll get you a specific answer after the webinar is over. Will a credit card company cancel your credit card if you do not use it?
Yes, they do have that ability to cancel that as well. So again, it's educating yourself and knowing that's kind of where the need kind of goes into play when we're talking about the need of it. You know, if you're responsible when you sign that contract, you're responsible for that agreement. You've agreed to make certain payments of a certain amount on a certain day. So just know that you're able to do that, or that you don't want to be in default, and you don't want to hold that default over your head either. So again, making sure that you make those payments on time and educating yourself on your credit, your interest rate, and also your the loans the documents that you've signed for.
Awesome. And so if a bank increases your credit amount, should you take it or reject it? So I guess if a credit card lender increases your credit amount, should you take it or reject it?
Yeah, I'm going to leave that up to that person to make the decision. Of course, you want to make sure that, again, what we call DTI, or debt to income, is another history or aspect of credit that I would recommend you going online and learning a little bit more about that. In some instances, if you've been paying on time and it's like a prize for you and they raise your limit, that could be a benefit to you as well. But you have to look at your picture. You have to look at your credit and determine if it fits you, if it helps with your DTI and your rates and whatnot on it. And if it's something that's honestly is going to put you deeper in a hole, or that you probably shouldn't have it as large as it should be, or as they're wanting it to be, you can always reach out to your financial institution or that lender and request that you keep your amount the same.
Awesome. And then what are some companies that help or approve for debt consolidation loans for poor credit? I think we can name one for sure.
Yes, definitely. Yeah, there's a lot of different companies out there. That's something that you'll have to do your homework on there as well. So, yeah, if Washima, if you want to share that with them, more than likely to share that link or what it is for them so they can get that.
Yeah, so we'll be sure to share some resources regarding that. And then Texas Trust offers debt consolidation loans as well. So if you want to see if we can get you approved, you're welcome to contact us and get an appointment.
And that's a really good thing to kind of keep in mind too. Again, we're talking about that consolidation of 4 or 5 different interest rates and consolidating into one interest rate that helps you save money overall.
Absolutely. So if we were not able to answer your question today, we'll definitely get you an answer in the next few hours. Thank you so much for engaging with us and watching our webinar today. So if you would like to learn more, become a member, or talk to us directly, again, please feel free to contact us using the information on the screen. We have some links posted in the comments for if you would like to schedule an appointment or have one of us give you a call. So our next Facebook Live webinar is going to be on Tuesday, June 8th, and we will do an overview on managing debt. And we will talk about financing and auto loans. So please do tune in next month. Thank you so much for tuning into today's webinar. Texas Trust Credit Union is here with you every step of the way for all of your financial needs. We hope to see you next time.